the Monetary Policy Committee continued to flag the upside risks to inflation, but at the same time, we saw in the Reserve Bank's forecast of inflation, we saw a notable improvement. At the time of the May meeting, the forecast was that inflation would drop to 4.5% only in the second quarter of 2025. But this time around, we see those forecasts having improved, with inflation expected to be at 4.3% in the final quarter of 2024. So that shows a notable shift in inflation expectations, which points to an imminent interest rate cut.
When you look at that voting split, I mean, did you find it particularly interesting that 4 wanted it unchanged, and then there were 2 who were advocating for a reduction of 25 basis points? What did you think of that split?
Absolutely. That was probably the most interesting outcome of this week's MPC meeting. I will say that, split decisions, as yesterday's, often point at a change in direction. So in this case, after a couple of meetings, the Reserve Bank keeping interest rates unchanged, I can confidently say that we are about to see a shift towards a cutting bias. That was the most outstanding factor in that statement.
As much as we have this anticipation that we will see rate cuts locally, that, sort of messaging or that narrative is starting to grow, especially when we look at what's happening with the Fed, when you look at, markets pricing in a rate cut in September. Talk to me about what you're seeing when you look at the U.S. economy and some of the aspects that are supporting the shift that perhaps we might see something happen in September for the Fed.
Sure. I mean, the U.S. economy remains reasonably buoyant in the sense that private sector job growth is still quite strong at more than 200,000 a month. We're seeing wage growth still above 3.5%, and the labor market in general is quite firm, even when you look at jobless claims. On the inflation side, the decline of inflation is very slow, but that can be understood from the fact that, services inflation remains sticky in the U.S. The end of next week, we're getting that critical core PCE inflation number, and with an expected further moderation. It all points to the Fed cutting interest rates on the 18th of September. That's all priced in the market. And even, from Jerome Powell's recent public announcements, we're starting to pick up a clear message that the Fed is starting to worry about the risk of committing an era of keeping interest rates at these levels for longer than it is necessary. So that September 18 meeting will be quite critical. And remember that it will be a day before the South African Reserve Bank announces its September decision.
With that said then, and I want to hone in on the 2 participants who were, voting for a reduction in rates yesterday. Suppose that happened. What would be the implication if the SAB were to move before the Fed?
No implication at all. The SAB governor always stresses that the South African Reserve Bank watches the Fed and other major central banks across the globe, but the SAB does not follow what they do. And we can go back to the start of the hiking cycle. You'll remember that the South African Reserve Bank started hiking in November 2021, which was a couple of months before the Fed started hiking in the first half of 2022. So the impact on our economy would not have been so significant. I mean, even looking at the spread between South African interest rates and US interest rates, we would still have been above US interest rate. That yield would have remained attractive. So I wouldn't have expected a significant impact on our markets.
We had President Cyril Ramaphosa deliver the opening of Parliament address. Local markets have been quite excited or hopeful around the idea of the GNU. And there was quite a lot that was put forward in terms of that particular speech when it comes to some of the priority areas. As an economist, what are you going to be looking at over the short to medium term in terms of whether they make a dent regarding that long list of priorities?
I was encouraged by the fact that, economic revival was at the center of yesterday's speech. The president spoke about advancing the renewable energy revolution that we've seen in the country, since his July 2022 statement when he presented the Energy Action Plan. He talked about, really taking advantage of the opportunities offered by the digital economy, and he also focused on stabilizing the municipalities. That's where service delivery really happens, and better service delivery will help to improve the business environment, particularly for the small and medium-sized enterprises. So that was quite encouraging. So we are going to be looking out for the rollout of the second phase of Operation Vulindlela, which so far, by the way, has made significant strides in helping to basically unlock those gridlocks in the economy, particularly on the bureaucratic side. So that's what we're going to be looking out for.